Welcome to the Ag Commodity Corner Plus. My name is Mo Agostino, Chief Commodity Strategist with Farms.com Risk Management, and it is May 2nd. It's about 3:30 in the afternoon, and we got Avinash Global here with us as well. Our title this week is Trade Optimism Offsets Lower GDP, U.S. GDP. April anxiety lifted as commodities and stocks trade above Liberation Day lows as they climb that wall of worry. So let's get into it. We'll start off with our summary weekly market quote chart. You can see some of the highlights. Corn, this is for July futures. Corn actually closed down 10 cents. We'll explain why here in a second. Canola actually traded to new contract highs. We talked about that last week. We'll get into that as well. Chicago wheat actually traded to new lows before bouncing by the end of the week. Live cattle just continued with their record trend higher, as well as feeder cattle. And of course, the Dow Jones, the NASDAQ, S&P, Bitcoin, all higher this week on that trade optimism. We'll get into that as well. And then gold, because that anxiety has been lifted a little bit, we got gold coming off a little bit this week as well. So, Avinash, why don't we start off with the stock markets?
Yes, Mo. So, like you just said, all those stock indices have been climbing. Stocks extended their multi-day climb today as well, following better than expected jobs numbers and signs of a potential thaw in the U.S.-China relationship. The S&P index is on course to closing higher for the ninth session in a row, which is the longest streak of daily gains since 2004.
So you can see on the chart there's that V-shaped bottom. We don't get V-shaped bottoms in stocks like we do in livestock, but this is Trump. This is 2025. So this is an odd year. And we're up 18%, as Abhinash said, from the lows, 18.3. You can, that's from the 90-day pause on reciprocal tariffs on April 9th. They're talking trade deals with, obviously there's more talking between China, but trade deals with South Korea, Japan, Mexico, India. They're now talking 18 trade deals versus 13 last week, so we've come up a little bit. But each week they promise an announcement. They tend to fail. So far today we haven't seen anything. But this is good news. I think the bear market's over. And this could be the start of an extension of the bull market from 2022. So we'll have to see, because I'm still concerned that on July 9th, after the 90-day pause, what happens? So there's still some uncertainty with the markets.
Well, Mo, talking about the U.S. economy, we had the U.S. GDP numbers for the first quarter of this year come out, and they were lower by 0.3%, and this was the first drop in 3 years, and it compares to a climb of 2.4% in the last quarter of 2024. And digging deeper, you could see that the US imports actually rose by 41.3% in the first quarter, and that was because a lot of the importers and companies were trying to get ahead of the trade tariffs.
Trump's back at it. He's slamming the Fed, Powell. He wants rates to come down, but I don't know if we're going to avoid this recession this time around. We had that last recession in 2020, COVID. It lasted for a very brief period of time. Central banks around the world spent money, lowered interest rates to get us out of that. I don't think we're going to be able to do that this time around, unfortunately. The Fed's not being proactive, but he's also stated that he doesn't want to lower interest rates just because of Trump's stupid tariffs. So there's going to be some industries that are going to be impacted by the tariffs, like consumer staples, McDonald's, Walmart, with those shelves that are going to get empty. You got toys, shoes, clothing, but some sectors are still doing quite well, not being impacted by tariffs whatsoever. We'll talk about that here at the end.
Well, let's take a look at the weather outlook. The general theme for the US, and now since we've got planting going on, for the next 2 weeks, it is expected to be warm and dry for much of the Midwest, with the above normal precip and normal to below normal temperatures across the south. The forecast overall remains beneficial for planting.
Yeah, the May forecast for the United States and even for Ontario and parts of Western Canada don't look that worrisome, non-threatening. 94% of normal precipitation is what was expected over the next 14 days in that U.S. Midwest.
This here is the Chicago wheat weekly futures chart. Wheat futures hit a high, as you can see there, in mid-Feb, and have since fallen along with the grains complex due to trade war concerns and bigger global production possibilities from EU and Russia.
Yeah, unfortunately, wheat this week traded to new lows again. We've talked about this for months and months. Weak global demand and just ending stocks in the U.S. are just way too big. And with all these rains that the South is getting and that hard red winter wheat country is getting in the U.S., soft red winter wheat country, it continues to waste. But late in the week, we did get that bounce. So we'll see. I don't think this is the start of a new bull leg at all.
Well, we spoke about weather, and this chart here looks at the US soybean planting pace, which is record high. So you've got the US soybean crop, which was 18% planted as of last Sunday, which is ahead of both the 5-year average and also trade estimates as well. It was at a record pace as farmers plant soybeans earlier and earlier each year.
There's some reports that 60 to 70% of the both soybeans and corn are planted in northern Indiana. That's really quick. And we got soybeans planted before eastern and central Illinois. There's some farmers in Ontario that are done planting corn. If you have those clay soils and you're too wet, unfortunately, you're a little delayed, but it's only May 2nd, so this is average. I mean, we don't get into delayed issues until we get to mid-May. So I think this record planting pace is going to continue into next week.
This is a chart of soy oil versus canola and comparing to soybean futures as well. Soy oil continues to be on an upward sloping uptrend supported by strong demand fundamentals and biofuel policy hope.
Yeah, so there was news that the U.S. was going to announce some new RVO volumes on biofuels, ethanol, so it drove soy oil futures back to that ceiling at around 50. But again, lack of news is weighing to end the week. But it did support higher bean prices to end the week as well as canola. Canola actually went to new contract highs for July at 708. We talked about this last week. In fact, this week, exports at 7.5 million metric tons has already hit the AAFC target for this year with 3 months left in the marketing year. So there's going to have to be some more rationing in canola with higher prices. Don't forget to sign up for an 8-week free trial. This past week to our clients, we provided them the seasonal summer highs for grain futures over the next 3 months that have happened over the last 20 years. So if you want that insight, please sign up. It's very easy to do, and it can help you make some better decisions here over the next 2 months.
Well, let's talk some more about geopolitics. In one of our previous podcasts, we did touch upon the US-Iran relationship. So, US President Donald Trump said any person or country that buys oil or petrochemicals from Iran will be barred from doing any business with the US. He initiated negotiations with Iran over its nuclear power program in April.
You can see from this chart that China is the largest buyer of Iranian oil at 613,000 barrels. I believe that's per day, but I'm not sure. Nonetheless, Trump is attacking China again. He's essentially saying that they're going to sanction China if they continue with this. So I think the U.S. wants China to buy oil from the U.S., not Iran. So China really hasn't reacted to this, but midweek, crude oil was trading a little bit higher, adding that geopolitical risk premium, but we're ending the week on a lower close.
More sticking with that crude oil theme, crude oil prices have been falling and posted their largest monthly drop in April since 2021 after Saudi Arabia signaled a move toward producing more and expanding its market share, while the global trade war eroded the demand outlook for fuel.
You can see we're down 44.5% since the highs of 2022. That post-COVID low at 2020 at 34.60. I doubt we go that low because that's a rarity. That's a black swan, although I've called this Trump trade war 2.0 on steroids the next black swan. But things are starting to improve, I'm hoping. Watch Monday. OPEC Plus has a meeting and they're looking to accelerate that oil production increase that they posted in May of 400,000. If you see a double of that, if you see anything more than that, a blockbuster surprise, this thing's probably going to hit new lows. That low on April 9th was below 55 bucks. So if you do get that, maybe that's a buying opportunity for your diesel fuel. Sign up to our program. We're going to be talking about to our clients next week on what to do. And to finish, we got two more charts. A minerals deal, Ganesh.
Yes,
I didn't think that this was going to happen.
This week has been a lot happening in terms of geopolitics. This week, the U.S. and Ukraine signed a deal to create the U.S.-Ukraine Reconstruction Investment Fund, which was the long-awaited deal that gives the U.S. rights to Ukrainian rare earth minerals.
This is a good deal, but unfortunately, I'm not sure we're any closer to ending the Ukraine-Russian war because Putin is asking for too much, and I don't think Zelensky is going to give up Crimea to Russia.
We have earnings season, and the big U.S. tech firms Meta and Microsoft reported blockbuster quarterly reports this week, pushing shares of other tech firms and also AI companies higher. And the reason why that's important is because prior to that, investors were wary of the potential negative impacts of Trump's tariffs on companies' AI ambitions.
Microsoft and Meta were part of the Mag 7. They are the fallen angels from last July. Remember, the last 2 years, the Mag 7 were driving the stock market and they were the pillars of the stock market. But guess what? Tariffs don't seem to be impacting AI demand. I said earlier, it's probably impacting consumer staples, but not AI demand. So remember, these 7 stocks are starting to support the stock market, and that's why we've recovered from those lows.
More like we do every week, looking at the CFTC managed money fund situation. CFTC report as of last week, which was 22nd April, showed selling in corn of 11,768 contracts to take the position to a net length of 112,805. Soybeans were up, as you can see there on the chart, by 4,898 to 31,067. Chicago wheat up 65.10, but still short 89,929.
Yeah, so in real time, if you look at what happened this past week or so, corn, the funds are probably did sell some more of the corn because it closed down about 10 for the July futures. But they bought probably some soybeans, canola, soyoil. They bought the cattle and the hogs. They sold the crude. So all in all, this time of the year, the next couple months, seasonals will play a role, weather, and maybe some trade deals if they do get announced. So thanks for watching again this week. Don't forget to sign up to our program. And until next time, take care.